Joining us right now for more on the tech sector and specifically whether we are now witnessing a bubble akin to that of the 1990s is Ajay Chopra. He is general partner at Trinity Ventures. And by the way, Ajay knows what he speaks of. He co-founded Pinnacle Systems back in 1986, and he helped bring that company public on the NASDAQ in 1994. He was the chairman in 1999, and then he remained in a leadership role at the company until 2004. So, Ajay, welcome. It's good to see you. And you have seen turbulent times in the past.
Absolutely. Yeah, in 2000, for sure.
What do you think this looks like? Because people are wondering if this is a movie we've seen before or if this time is different. What do you think?
I think it's different, in my opinion. If you look at 2000, internet was sort of brand new on the scene, having been brought into the public psyche in the mid-90s. Many of the companies that were born at that time were sort of on the promise of the internet. You may recall the term Pureplay internet companies as opposed to traditional offline companies. And there was a lot of euphoria at that time. Many companies that went public actually had very little or no revenue, and actually barely a business model. Most of the business models that came on around that time were related to either advertising or e-commerce. That's changed a lot, over the last 20 years. Most of the companies that are going public right now actually have very robust revenue levels, thanks to the amount of money that's poured into private capital, venture capital. These companies have stayed private longer, so they're more mature in the way they handle the business cycles. The business models have evolved. Instead of being solely advertising-based or e-commerce-based, they're now largely subscription-based. So if you think about consumer companies like Spotify or Peloton, and certainly SaaS companies in the B2B side like Slack or Zoom, they're all subscription-based companies. And also what we are now seeing, the next wave, is that software is in fact eating the world, in the sense that many of these software companies are moving up the stack. For example, Lemonade, instead of providing its technology to insurance companies, is an insurance company itself, a technology-based insurance company. Same thing with Robinhood for brokerage, Airbnb for hoteling. One of our companies, Earnin, in the banking area. So you're seeing, these software companies evolve their business models to capture more and more of the gross margins and profits in each of these sectors. So it's a much more sound basis. Not to say that some of these stocks haven't run ahead of them. I think there's definitely euphoria in the market. There's no doubt about it. But they're based on sound business models, revenue, high gross margins, and solid growth, as opposed to what was happening in 1999 and 2000.